Good evening, everybody. And tonight I'm going to be talking about choosing your counter currency. And I want to basically put the backdrop in there. At Corellian, we look at a trading process, and most of that is based around preparation. We actually believe if you prepare yourself well for trading, then you'll do well over time. And one of the key things we do as we look to get trade ideas on board is, the next question we ask ourselves is, what's the best product for us to reflect that good trade idea? And if we then choose FX as being that product, and, as we say here, we've got euro dollar up here, and when we're choosing a trade idea that's based around euro just because we've got that currency up here, there is a counter currency to that. So euro will be the base currency if we're looking at it theoretically, textbook stuff, but there's always a counter currency to that, and it's sometimes called the quote currency. And you will find the US dollar in a large majority of trades for obvious reasons. Biggest currency in the world, lots of commodities, Bitcoin, etc., generally quoted in US dollars, oil being one of the larger ones as well. So we will find that the US dollar is in most of the currency pairs that people quote, but actually sometimes we're missing the trick there, because if we look at this instance, we got euro on the left-hand side as our base currency. Choosing the US dollar may not be the right counter currency to reflect our trade idea. We may be in a situation, if we were looking to buy euros, that we choose the US dollar, which could be equally as strong, or in some instances we've seen over the last few weeks, a lot stronger. So we need to be a little bit smarter when we do FX. And the selection of our counter currency is actually quite critical to some of the performance that we can bring to the table. And if you look on the right-hand side there on the Plus500, you've got all those US dollar currency pairs at the top there, but look down the bottom. All of those currency pairs are very, very liquid. They're freely available. They're quoted as direct currency pairs in the wholesale market. Euro against Swiss, euro against yen, sterling versus the yen, sterling versus the Aussie. If you're looking at commodity trades, that's a potential one. So plenty of opportunity and plenty of access to these currency pairs. So let's think about that, and let's look a little bit deeper into that. As I say, if we produce a trade idea, in this instance, I'm going to choose cable just to keep it relevant, and we're going to look at last week's cable moves. And maybe my trade idea is I feel it's been oversold. 3 weeks of underperformance, there's cost of living issues, etc. Are the Bank of England behind the curve? And I actually want to start picking up a bit of sterling because I think it's oversold. So there I have a plus versus GBP. My default, I guarantee everybody's default will be to go straight to the US dollar. So I want to sell US dollars I have to sell US dollars if I'm buying sterling. So what's my issue here? Well, the US dollar could still be on a strong run. Interest rates are going up a bit quicker. They're actually higher in the States. So I've already got an interest rate differential that's against me. Maybe the market backdrop, it is not so great either, because we've got a Ukrainian war. People are looking at the US dollar, as a bit of a safe haven as well. So, we need to maybe look a bit further, because we could be making a big mistake there if we were to choose the US dollar. A couple of other things we need to take into consideration is clearly, there could be more volatility in some of these currency pairs. If we look a bit further afield than the US dollar, can we cope with that as an individual trader? Margin requirements may be different as well, particularly if you were to move as far afield as emerging market currencies such as South African Rand or other similar currency. And then one of the other key things to look at is there a calendar event going forward? So although I may want to buy sterling, if I do it just before a data release in my counter currency, then really my risk is shifting away from sterling, where my trade idea is, and it's moving across to my counter currency. And that's not where my trade idea is. So we also need to look forward to that calendar as well, to make sure we're not going to get ourselves in trouble. And another key one there, market positioning, that's more about sentiment. We can gauge. We may choose that US dollar and realize that market sentiment is still heavily that way, and we may want to move away from it. So generally, what is the process? Well, I've just chosen 5 currencies on the right-hand side. Of course, there's many, many more to choose from. And what you're really doing is looking at the credentials of each of those currencies. And in the interest of time, I'm not going to read them all out, but if I'm looking to buy sterling, I'm clearly looking to sell a currency that is going to be weaker over that period of time. And remember as well, this is relative. So it needs to be weaker relative to sterling. So they could both go down, but sterling may go down slower and you'll still make money out of your trade. So the things we'd need to look around the dollar, clearly strong central bank, safe haven currency, but is market sentiment gone too far? Yeah. Is everybody long of the US dollar? In which instance it could be the right currency. You know, Canada, are they having been quite quick out of the traps raising rates? Are they, done raising rates? Is that already discounted into the market? Will we start seeing some of those, some of the data getting a bit weaker going forward? These are decisions that we can make. The euro, is the ECB behind the curve? They have negative rates. Are they a lot more directly impacted by the Ukrainian war and the issue with Russian gas and oil? Japanese yen, we look in there, dovish central bank not raising rates, often a safe haven, but not been so much of late. And Aussie, obviously commodity linked, could that weaken if commodities come off? That type of thing. If China continues to slow down, then that could be a good opportunity for that to go down with those commodities. So lots of things to think about. We shouldn't make this a very, very arduous task, as we should be aware of all these connections to these currencies. But and hopefully you'll see very shortly, how it can make a difference. So we're looking for under and over performing currencies or economies, under or over position. That's that market sentiment again. And are there any currencies that are trending? That could help us as well. And one other thing to consider is possibly doing a basket. Maybe if you can't specifically pick one, pick maybe 2 or 3. I know it's handling more trades. It could be more margin requirements, but sometimes that can work in your benefit as well. So I'm just going to go through the sterling chart and see how it panned out. And I haven't specifically chosen a currency as a recommended trade. All I'm going to do is run through this chart and certainly the first half of it, and we'll see exactly what happened. And we can start seeing some differences, hopefully. So as we went into that close, we decided to buy. We would have got long somewhere in the early part of that week. 123.47 was already employment data came out. If we were long of sterling, it came out nicely for us. Sterling took a nice bounce. We went up to a 2.1% gain versus the US dollar. And we weren't far. If we look across the whole week, we weren't far from the highs of the week. We then plateaued, and that was probably because we were then waiting for this CPI print. It came out nice and healthy at 9%. Lots of people would have expected sterling to go higher from there because it may push the central bank into, a more tougher stance, and it never happened. Now, for me, just a little tip, when you get price action like this, it's a bit of a shocker. Everybody thought sterling should go up. It didn't. It went down. It's because there was a slightly different interpretation of that print. And again, this worry of recession, etc. And I think by then everybody had got themselves long of this market, and we lost, a fair amount of that market. Now, I'm not going to look at the rest of the week because of what I want to do is focus on where we were and how much, any differentials that were there in other currency pairs. But just take that one. The price action would have told me I was wrong. So at that point, I think I would have been getting out of my sterling trade because my trade idea was probably wrong. The bounce wasn't happening. It should have happened because we had all the inputs and it didn't. So please be aware of that. And I think that's where I would have cut out the trade anyway. So if we briefly go to the next page, and I've got those other 4 currencies up there, we'll see instead of a 2.1% gain, if you'd have traded sterling versus the Aussie, it would have only been a 1.1% gain. And in actual fact, you would have spent a tiny bit of that trade cycle out of the money as well. Similarly, if I go bottom left, I've got sterling versus the yen. I would have been slightly more out of the money early on in the trade. You know, have I got the temperament to keep myself in? Is my stop loss in the right place? And has that helped me? But then if I'd have stayed firm in my belief, I would have got up to 2.3% gain. Again, like the US dollar, like with sterling Aussie, and we'll see with all of them, sterling actually comes away against everything. So at that point, our trade idea is wrong. But you already see there's some differentials in your potential gains, and actually, you know, the pain that potentially you have to take against some of these as well. If we look at sterling versus the euro, then basically we would have had a 0.6% loss. So again, you've got to ride that one. And then it would have moved to a 1.1% gain. Only half what you would have got against the yen or against the US dollar. So again, an impact if you choose a different counter currency. And we can look at sterling Canada. Yes, you would have made some money. It would have been fairly flat to start with. So hopefully you see this. We didn't particularly pick a week where you would have had vast differences, but there's enough in there, you know, to say that if you'd have chosen the right currency pair, i.e. the right counter currency, you could have gained more than double one versus another. Now, in this instance, I know we said you don't always choose the US dollar, and that certainly would have been up there in terms of best returns, but hopefully that's given you a bit of an insight in that choosing your right counter currency can actually be beneficial to you. Just take that little bit of extra time and make sure you've got the right one. Thank you very much for listening, and hopefully I'll see you in a couple of weeks' time.